By this simple tweak, we've been able to achieve a payoff graph which looks something like this. But what is even more powerful, if you just have a look at this here, this is only happening because of our strike selection. Hi everybody, welcome to a very special video. Today we are going to cover cross calendar, how to make it, how to deploy it, how to adjust it, the VIP points. We're gonna cover an entire 360-degree point of view, a very low on stress, full weekly hedge. Before that, standard disclaimer, any strategy which you learn contains a certain amount of risk. But if you are trained in options, if you're putting in work and you're learning better things, obviously your risk can be significantly reduced. But risk is always going to be there. Now let's learn something which retail rarely discover. Number one, what is the real meaning of relaxed trading is what I want to ask you. When you already have the worst factored into the strategy, once you already have that in mind, then your trading become a lot more relaxed. How to build this strategy with the combination of weekly and monthly option. This is a very beautiful balance which we're gonna fit in. So next few minutes you're gonna learn everything, and then we're gonna talk about even advanced stuff like we always do. So here we are on an option simulator. This is Opstra. You can take any platform of your wish. Sensible is free. Even Opstra, if you just simple Google login, that is also free just to create a strategy. Now, obviously, August series is almost over, so we will look to create positions in the monthly series. So we have picked naturally the month which is September, right? Which is the current month. After a few days, gonna start the new series, right? Now, what do we see is this is at the money 24,850. You could see now as I move ahead, I'm gonna tell you more points. Step number one is we look to sell at the money call. Remember, we are doing this in the monthly series, not the weekly right now. We sold this, right? Now what do? We go 200 points above from our sold strike, which naturally happens to be 25,100. And now we look to buy this. So first we sold at the money, then we went 200 points up, we bought it. And now after that, we go 200 points more above, which happens to be 25,300, absolutely correct. And now we will buy this again. Clear? So selling, buying and buying to 200 points gap. Now we're gonna go 200 points more above, which is 25,500, and we look to sell this. But we are not selling it in the monthly option. We will sell it in the weekly options. So let's do that. 25,500 we will sell it in weekly. So naturally what we're gonna do, we will go to the weekly because August 28 is just 2 days away, so it's not to be considered. So we go 2nd September now and we go down, and 25,500, the same strike which we selected. Now we are shorting this. One point which you must remember is that we are not doing naked selling. We are selling to, we are buying to. Step one, shorting at the money, 200 points above, buying it, 200 points more above, buying at the money call. And after that, what do is that we sell a call which is 200 points away, but this time we are doing it in the weekly options instead of monthly option, obviously. And when you see this, this is how this looks. Now I just want you to pause here. The kind of volatility which we have in the market is absolutely crazy, right? The same public strategies, like Iron Condor or Straddle or Strangle, very well how these strategies are performing. Is this an upgrade? Let's find out. First of all, the number one thing which you must notice is the margin which you see, it's quite less. Obviously, because you are hedged, you are buying to and you selling to, so naturally you can expect some kind of a margin benefit even if you trade markets which is not Indian. Now here what you see is if market starts to go up, what you see is here, if market go, you could see that the maximum profit which you see here is around this, versus if things go completely against you, if you see the loss, you can compare. Now you can obviously compare the balance between the profit and the loss. If somebody starts to create a strategy like this, how beautifully balanced this looks. This balance, it's not coming just because of the strike selection. This balance is coming because we are creating a very nice balance between the Greeks of all the call options which we picked of different strike. And this is the cross calendar which you see, and obviously I don't need to tell you, you could see it on your screen. If market go in your favor, you could very well calculate that how beneficial this can be versus if things go completely against you, then how non-beneficial this can be. Now, obviously, you would like to reduce this part, the negative part. How do we do it? I'm going to tell you for sure. Now, these kind of strategies obviously remain quite far from the public reach because these are the professional strategies where the balance between the maximum profit and maximum loss remain quite skewed and obviously much relaxed because the verse is already factored in. And if you like strategy like this and would like to go deeper through our structured educational courses, check the pinned comment and you can leave your details there and my team can share all the information. Remember, it's only for education and not a financial advice. Now let's learn some more points on how to make it even better. Time for your favorite VIP points, the alert. Cross calendar not to be done after a big event because of IV crush. These kind of strategies just before the event are extremely highly risky. So you need to consider it before you do it just blindly anytime. This is not to be done because if IV crush, then the balance between the profit and the loss is not going to sit very well. That is something which you must realize. When you trade calendar strategy is way different than other public strategies, which maybe you've been doing it from a long time. Point number 2, how to improve your ROI in this. So we're going to do a little tweak in the strategy if things start to go against us. Obviously, we cannot make the risk zero, but we at least try to reduce it. Now let's go to Opstra again and understand it more. Now obviously if market go bullish, then that's not an issue, but if market start to go bearish, then we would like to do something. What we can do is if market start to go bearish, the best part is that we have sold the call which is really far out of the money. We sold a 25,500 call that is weekly. Now obviously what do we expect is the 7.4 premium to reduce if market starts to go away from it. Now, as soon as the 7.4 become 50%, right? What we can do is we can simply square off this call and we can bring it down. When we bring it down, suppose if you bring it down by suppose 100 points, how will it look? Let me show you. So 25,400. Obviously, we can, jump our strike. As soon as we do it, the payoff will not have much of an impact as you can see. But as you're jumping your strike, you are taking extra credit, which is helping you reducing your this red zone, which you can see over here. Or you could jump instead of 1 strike, 2 strike, which you can do. The whole idea is to decrease this at the same time, not having much impact on this. So this is exactly what we can do if things start to go against us. But as soon as you take a trade, market only gonna go 2 ways, right? If market can go up really or market can go down. In both situations, we try to come out with the favorable outcome. If we not achieve the favorable outcome, obviously the natural thing is how to really protect ourselves even more. We could always do it with such a simple tweak. In a short amount of time, you have learned something really powerful. The cross calendar remains the play between the strikes. You can obviously try to do some kind of a ratio cross calendar as well. If you request in the comment section, maybe I come out with a video wherein I'm gonna tell you exactly how to do a ratio cross calendar spread, which is very different, maybe a lot more powerful in some situations. So you can obviously ask if you want a part 2 of the video. If you want to improve your covered call, I've made a video on this. If you want to improve your iron fly, and obviously when you come on this channel, you expect some things which are really different. These strategies is not for somebody who don't know basic of options. If your basics are in place, if you've been trading from 2-3 months, then these kind of strategies, these kind of better methods come in extremely handy for you. And obviously the adjustments by which you can make your strategy even more stronger. Thanks for watching the video and I wish you all the very best.